Hi traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. It's time to get started on our morning analysis. We'll go to the euro dollar, and I think most of you, um, you know, I take that back. There's been a lot of you that have just joined us over the last 30 minutes or so. Um, uh, uh, I was looking at the euro dollar a little earlier, and obviously, I want to take a step back for a moment. Let me get rid of this really quick. I'm gonna remove that. Okay, so the euro dollar is coming down to a place that I think is extremely a good value zone, and I personally want to be long the euro dollar down here. I am looking at the 108.50 level as an opportunity. This is a 618 retracement. If you can see the 618 right through here. That comes in at 108, basically 108.40. Here, let's zoom in a little bit. Okay, 108.48, 108.50. That's a 618 retracement of the low back in December to the high, once we broke out. And it's also a retest of this broken trend line. Now, this broken trend line, you guys know, is a big deal to me. I mean, we have multiple touches. So you can see here, right there, right there, right there, right there, right there. This is the place that I really want to be long, the euro dollar. And so I am going to get long if we dip down there today. So, I'm hoping it's one of those, just hope that the euro dollar gets down to the 108.50. I can start being a buyer there, because I think of being a buyer here and, looking for a bounce back above 110, very doable. Okay. So I am personally looking for a move in the euro dollar down to those levels, and you can see here in the daily chart. Let's get rid of that. No. See the daily chart. Any move down to 108, 108.60. 108.50 level is going to be a great opportunity. So I'm looking to get long there. So let's put in support at 108.50, 1.0850. Okay. All right. Now resistance. Okay, for today. Yeah, I gotta assume. There's gonna be a lot of people trying to buy it before 108.50. I think it's a number that's on everybody's radar, right? I mean, you know, I know I'm not the only rocket brain surgeon here looking at this stuff, so just kidding, because I'm not one. But you guys know like I said, it's not rocket science that everybody's probably looking at a buy, down here at 108.50. Now, resistance right now is the spike high from overnight, because that's also going to be the spike low over here, really close to. So the spike low over here was 109.56, and the spike high here is 109.62. So you can see 109.60 is major resistance right now. Okay, so the thing is if it gets back above 109.60 and you're not long, then you've already missed the turn, and that's the way I'm looking at it. If it bounces if it goes to 109.60 to 110 and I'm not long, then I've already missed out. That would be my 2 cents. Okay. All right, so that's what I'm looking for with the euro, and it is in a range environment. Let's go look at the cable. So the cable closed on its lows of the week. Okay, it closed on the lows. We have failed to move higher. I mean, even overnight, We went as high as 139.13 and then just reversed. You know, I still think that a move down to 107 or 137, you know, 30, 137.20 is very doable. Okay, it's 161% extension here of this move. Okay, it's 161% extension of low there. Ah, crap. Low to high. That comes in at 137.20. I still think that that's doable, and I think that we're going to get down there. Now, as I told you last week, if we get down to 137 and change, I am looking for a bounce. So, you know, we should get down there. I think we should. Now, the problem that the cable's going to have is if the euro makes it down to 108.50 and it starts to bounce, it might prevent the pound from making it all the way down there, perhaps. But that's where I'm looking for. Now, you know, what is that going to do anything for us today? Probably not. I mean, today, I think we're going to stop well short of those levels. I would think anyway. So if you take the last low here to the high there, 127th here, 127% extension, 161% extensions, 137.75. That's doable today, especially if you know you trip stops through 138. I think it's doable to get to 137.75. So 137.75. The resistance here is 139, you know, obviously 139.13, which I'll just write down 139.15 for now. And this is in a bearish trend. Okay. Let's go take a look at the Swissy. So the Swissy, I mean, this thing, you know, like I said, there was a Swiss referendum vote over the weekend. Nothing real like market related. That I saw, but you know the dollar Swiss is still, you know, making a move higher, broke above parity, and here, let's get rid of this really quick. So we're challenging the 618 retracement right now, and I mean, I don't think I'd want to be long ahead of today's highs. So 1.0037, that's going to be good resistance today. 1.0037. I still think we're in a range here. Support be the overnight low, which is 99.50. Okay, and you know, and there's a shot that we can continue a little higher here in the Swissy. I personally wouldn't be chasing it up here. Yeah, I'd like to buy it on dips. I was hoping we'd dip back down towards 98 cents to 97, you know, maybe even 96.50. But you know, obviously we haven't seen any dollar weakness come through the market last week. I expected some dollar weakness last week that just didn't come to fruition. It did through the dollar yen, but not through, you know, these European currencies. All right, let's speaking of the dollar yen, let's go over to the dollar yen. So I did not short the dollar yen at 114. I'm still waiting for a little bit higher prices. The problem is you know, like I said, I had some family over, and so I didn't notice where the dollar yen was until we were trading down around 113.50, and I was like, well, you know, I don't want to chase it lower, and it just kept dropping. So now at this point in time, 114, it's going to be interesting to see how we respond up here. And I remember last week, if I'm not mistaken, I think last week we had 114.10 written down for whatever reason, which would be the 786 retracement or close to. All right. Which is now, you can see 114 is very significant. Support. $112.62. Okay. See these spikes below here. I mean, they're basically just holding in this 112.60. I mean, that's pretty significant support. All right. So yeah, we could be flagging to move lower, obviously, but I think we need to pay attention to 112.60 today. I do believe it's bearish. Okay. And now, any rally back up to 114, what I'm going to be really curious about is if we do get a bounce in risk appetite like we're seeing right now, stocks are bouncing higher. If we see a bounce in the dollar yen, will we exceed 114 or are we going to stop shy of it? Because if we stop shy of it, I might have to start buying some yen here in the next 24 hours or so. I'm going to have to start shorting some yen pairs. I haven't done so already. I would consider it, but it also a lot of it depends on what equities are doing too. Okay, so 114, I think is going to be significant for today. As far as resistance goes. 114, 114.05, somewhere in that neighborhood. All right, let's take a look at the Canadian. So the Canadian, we are below major support. Okay, and this is this support I think was really key, and and now that I think we tried to. Well, no, we didn't quite get up there. Here, let me get rid of this yellow area. Okay, this is very significant. Any rally back in the U.S. dollar Canadian, any rally back to 136.30 is going to be a short. And I do not have any Canadian exposure right now. All right, but if we rally back to 136.30, that I believe is going to be significant resistance, and that's going to be a good short opportunity. Obviously, the lows down here at 135 are going to be support, and if we break through 135, it'll start our move down towards the 131 level, which I think we're going. So we are in my opinion, we are in a bearish trend. We went from a very bullish trend. Okay. We went from a very bullish trend. Let me grab my pen here. We went from a very bullish trend to a neutral stance. Okay. And now we're trending lower. So now we're in a bearish, in a bearish move. And as long as we stay below this 136.50, 136.30, 136.50, maybe even 137, we're going to be in a bearish trend until we, probably get down to here. Now that's, that obviously, as long as the Canadian currency continues to hold up well, or excuse me, as crude oil continues to hold up well, that's going to continue to push that dollar Canadian lower, in my opinion. All right, I do not have any Canadian exposure at the moment, but I wouldn't mind shorting the dollar Canadian on any rally at this stage in the game. All right. So one of the things I guess we should also pay close attention to at this point is we are at, and I mean, yeah, we've been below it, but we're basically holding the 618 retracement, which is important because if we break through 135, that's going to tell you that it's a failure, that this 618 is not going to hold, because if we break through 135, then that does expose a move down to the 786, which will be 132 and change, which seems very logical, especially you have this upsloping trend line here that's coming up. So by the time if we break through 135 and we make our way down here, we're going to eventually touch this trend line, okay, which will be at a 786 retracement. All right, so that's why I think 135 is so important at this point. Here, I'll put in, yeah, I got an asterisk there, because again, if we break through 135, that's what says, okay, that 618 could not hold, and now we're breaking down. Okay, let's go over to the that was a Canadian. Let's go take a look at the Kiwi. All right, so the Kiwi dollar, this is an extremely dangerous chart. All right, the Aussie and the Kiwi both very dangerous charts from last week. So I was long some Kiwi, and I got out of it early Friday, thank God, because on Friday we had this little breakout here, Thursday, Friday, and I got out of it because I wasn't comfortable. We were trading around, I don't know, 67 and a quarter or so, like somewhere around here. And I said, you know what? I'm not comfortable that it's not holding. And it was before the news came out, whatever the data that was out on Friday. Is it retail sales? Hold on. What data was that on Friday? Wait a second. It was it was the PCE and the preliminary GDP numbers and goods trades balance. And yeah, so before all that data came out, I was like, I'm not real comfortable with the I had a long Kiwi, and I think I had a long Aussie at the same time, and I got out of those, fortunately, because they showed a false breakout. And the significance of this move is that we posted a false breakout not only for the week, but we posted a false breakout on the daily charts, on the weekly charts. You had the spike high reversal. That is, in my opinion, is extremely bearish. So what's going to be extremely bearish for the Kiwi is, you think about like tomorrow's dairy auction results. Yeah, if we break through the 65.50, this Kiwi is going to be in some hot, hot water. All right. Now that's not guaranteed to happen, but I'm going to tell you right now, 65.50 is extremely important support for bulls. Okay, I'll put 2 asterisks there. All right. Now I think any move back up towards 65.50, you got this gap here at 60 or 66.50. Excuse me. You have 66. We close at 66.27, so 66.30. That'll offer resistance. So I'm gonna write down 0.6630/50. I think both will offer some resistance on the way up. Okay, and we're in a range, but we're threatening to turn from we threatened to go bullish. Now we're actually threatening to start this bear trend again in the Kiwi, especially if we break through this 66.50. And again, a false breakout to the upside, that exposes some downside possibilities here. Okay. All right, looks like the cable just hit new lows of the day. Wow, the cable's such a piece of junk. All right. Okay, I'm going to be back in just a few minutes. I need to go freshen up my coffee. So when I come back, we will continue on with the Aussie, the dollar index, the peso, and everything else. So don't go anywhere. I'll be back in a few minutes. Thanks, everyone. Hi, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we're going to finish up our analysis, and we'll go over to the Aussie dollar. All right. Um, so going over to the Aussie, and um, this is the same situation that the Kiwi had. All right. The same situation being that we had a false breakout. Everything, was looking like we could break out to the upside in the Aussie. I got a little skittish there on Friday. Then obviously following, the data on Friday, it came under pressure. Aussie's outperforming relative to the Kiwi, which, is keeping the Aussie New Zealand bid. But at the same time, you have to keep in mind that the RBA is tonight. So we have the RBA decision that'll be a little bit later this evening. So obviously things can shift a lot in regards to the Aussie dollar. If you look at the double top that we're currently set up here, and this is the neckline, that we're breaking. I mean, it actually points a lot lower. Okay, it points to 70 45, but which is 100 pips lower than where we're currently at. Oh, do you guys not seeing the charts? Ah, crap. Sorry about that. All right, guys, here you go. Charts are up. Sorry about that. All right, so we were talking about the Aussie. I didn't go very far. So we were talking about the Aussie dollar. Where we did another failed breakout on Friday. Okay, like I said, I got a little nervous about that on Friday. Thank God I did, and we came under pressure. Set up a little double top. Here's the neckline. We're actually rejecting pretty much at the neckline. We try to rally back and slump back below there. It points to 70.50. Okay, that double top breakdown points to 70.50. I just don't know if we're going to get down there today. I think that one of the things that you might notice here is we're still making higher lows. All right, made equal highs, but we're still making higher lows. So this support is going to be pretty significant. Because if we do complete the head and the double top and we actually make it down to 70.50, okay, and this spike low will be 70, basically 70.70. If we actually complete this double top, that's significant in a sense because we've now broken the structure of making higher lows. Okay, so now we'll be making lower lows, which will set up for move back into the probably the lower end of this trading range. But right now, I think we can mark the high. I think that whatever the overnight high is here, I don't know if that's going to get touched today. Let me see something. It's a 38% retracement too. So high is 71.67. So I'm going to write 71.70. And support right now is 70.70. We're in a range. Okay, but 70.70. Why was I writing 70s? Oh, it's this right here. I guess we won't need that right yet. I'm going to write 71 cents first. You know what? I'll just do this. Okay. better looking. All right, so we have 70, 70, and then 71 cents. It's actually 71.05, but whatever. Okay, it's right here, which is support. Below that is 70, 70, 70, and then below that is 70, 50. All right, so it's a few levels of support for the Aussie. All right, let's go over to the dollar index. Okay, so here's the dollar index, making a nice little move. Whoops, wrong way. Okay, we're pushing previous support, current resistance. That low is at 98.42. Basically 98.40 is going to be, previous support, current resistance. We're getting up there. So 98.42. We're in a big range, making our way up to the range, and as far as support goes, I mean, the overnight low is significant. You can see how we're, I mean, I would just, I guess the overnight low is going to be important support. I mean, we've had a hell of a bounce, overnight. So I'll just write that low there as support at 97.80. All right, let's take a look at the peso. All right, so here's the peso. Okay, and it's the same that we've been writing down, 18 and then 1838. Okay, 1838. It's 1836 is the 24% retracement, but I'm just going to write 1838 now. 1838. That's pretty much it. We held that 18 support on Friday really well. I think we dipped slightly below that. And 18.38 resistance. And we're in a range as well. And like I said with the peso, everybody should know this. I'm patiently waiting for a move above here so I can short at the 38% retracement and at the 50% retracement. It's what I'm hoping for. I'm hoping for this head and shoulder pattern to really develop. I'm really hoping that we, can just get up to here and then reverse. All right. I don't know if it's going to happen. And I'm not short the US dollar Mexican peso at this point. All right, let's take a look at the Nordic currencies. Here's the US dollar Norwegian krona. We're making our way up to, hold on really quick, this may be a viable short here. Because if you think crude oil is going to bounce, all right, and you think that the U.S. dollar is going to start to pull back soon, like the euro is going to rally, this has got to be a decent short right here at 875. I'm not short yet, but what's this low here? And let me check something here. High, low. So you have a 618 that comes right here. You got the spike high right there. 875 to 878. I'm gonna write down 878 as being resistance. You know, if it spikes up to 878, I might get short. 8.78. I think that's going to be significant resistance. We're in a range. I might get short up there if I can. You know? All right. Support. Well, support right now seems pretty simple to me. It'd be right here at 865, but yeah, if we get up here, I wouldn't mind getting on the short side right through here, somewhere right around here. Okay, 865. All right, let me take a look at the Swedish krona. I don't think the Swedish krona is doing anything right now. Ooh. Might be moving up into resistance here, but I don't know if I'm still not excited about the Swedish krona because this is a very vague. I mean, I have this little triangle drawn out, but I don't know how significant it is. I think we need another touch in reverse here. I'm just not super excited about this Swedish krona at the moment. Okay, I'm gonna leave this is your bias chart right here, and let me answer some questions from you guys. All right, so